The collective value of all American publicly traded stocks is now over $58 trillion. That's more than a 3 times increase from just a decade ago. And American public stocks are now the second largest asset class in the world behind only Chinese real estate. These amazing returns coupled
Yeah, but will real estate stay valuable? Considering that the birth rate is dropping? I guess at least smaller cities and some countries gotta experience a lot of people leaving, at which point it would be wise to sell your real estate there if you have any. I guess big cities are gonna be safe, but real estate is far from a certain deal. I guess when it comes to like smaller cities, they might be trying to sell their real estate for just crazy prices. But if you looked around, then it would be basically a ghost town. Like every other house would be empty. So, I'm not sure they can.
coupled with new technology which makes getting in.
I'm just pointing out that we kind of live in a world where people see real estate as the investment, as a stack of bricks, and it has value because others do not have it, right? Because I have a stack of bricks and you don't have a stack of bricks, and possibly you have to rent out my stack of bricks. That's pretty much it.
Getting into the market.
What if there are less people? Who knows?
Easier than ever before has meant
But big cities are probably safe.
that more Americans than ever are stock owners benefiting from this strong market. Investing is the best tool for average people to build up wealth to fund some of the most important life goals like retirement, sending their kids to college, or leaving some money behind for their children. With more people than ever
Yeah, but it's very paid to play. You probably should put money in it, but
benefiting from the stock market, it means what is good for investors is good for everybody. The only problem is, basically everything I have just said is complete bullshit. You
No
are not
way.
an investor, but it's really important that you think you are.
So as we talked about, record for the S&P, record for the NASDAQ.
It's a big list.
just gatekeeping investing.
Some big numbers in terms of number of layoffs. It's always negative, and not to make light of anything people are going through because it's very hard. But often we see companies bounce
You can put in your $50 and you're an investor.
Okay, so the rate of stock ownership is approaching all-time highs, but those highs are probably lower than you expect. According to a Gallup survey, just 61% of households own any stock at all, either directly
That's a lot.
or through a mutual trust. This data is roughly in line with the Fed estimates, which suggest that we have now surpassed the previous peak of household stock ownership that was reached just before the market crash of 2008. More people owning more stocks is great, but the problem is that these record levels have only been hit for 2 reasons.
Is it great though? I guess it might be okay, but it depends on the distribution.
The first reason is that most of these stocks are held in 401k accounts, which have become far
That could be okay, but I mean the rate is going. I mean, I guess it depends. He's using an American context, but you might die before you're retired. So I don't know. But the way it's going, your retirement age is gonna be pushed up to 80 or something. So we'll see.
more common as old-fashioned employee pension plans slowly go extinct.
Why you're making like minimum wage?
This is putting the market risk in retirement onto workers. But overall, a diversified portfolio should be safer than an employee pension scheme, which have been completely evaporated in dozens of high-profile corporate bankruptcies in past decades.
Really? So you have no control over that? That kind of sucks. Assuming that is the case, it would make more sense if, well, assuming the person is reasonable, that they get the money and they invest it themselves. Even if it's like a traditional one, like you buy a house and like you rent it out. I'm not gonna get into the moral considerations here, but that's probably gonna be more reliable if like you have to like trust your business is gonna do you a solid. I don't know.
This is not really a sign of households owning more stocks, though, because in the past, employer pension schemes would invest their employees' pension accounts into the market to help fund the liability, so the only thing that's really changed is what entity is holding onto the shares. The second reason that
Especially if they invested into their own stock, right?
more people own shares now is because it's become easier thanks to low-cost or zero-commission brokerages like Robinhood. Now, that isn't necessarily a good thing. Investing should be a part of a sound financial plan, but it will not make you rich by itself. According to Robinhood's most recent filing, its average funded account had less than $5,000 invested in total. Another
That makes sense. People are broke. But if they're just getting into it, I guess that's fine.
report published by the finance firm Stilt found that almost 43% of Robinhood users had FICO scores below 650. A survey conducted by the Wall Street Journal found that debt relief was one of the primary motivators for using the investing app. Now, I don't want to crush anybody's dreams here, but the chance of being able to generate investment returns greater than the interest payments on high-risk consumer credit is effectively zero in the long term. There are people who get lucky, but the vast majority of these investors would be much better taking the money they are putting into Robinhood and using it to pay down their high-interest debt. If you do happen to have a consistent strategy for generating returns above the interest rate of a low credit score car loan, then you don't have to worry about those anyway, because Citadel or Jane Street would probably offer you a 7-figure signing bonus. Clearly, a lot of these users are not being realistic about generating consistent investment returns.
They must be desperate. But that is why people buy lottery tickets. Because, yeah, I guess you can try to put away your $20 under the pillow, but you're not really buying hope. I mean, I guess you can try to save it up, and there are various ways of trying to do that. But if you buy a ticket, then you could be free tomorrow or something. I never bought one. But basically, you're buying hope. And you do see this a lot in other areas too. A lot of people seemingly get into business or maybe startups because they just want the money fast and big, right? And I can respect that, but it kind of gives you the wrong mindset, I guess.
Returns. They're gambling. It's probably no coincidence that the fall in active users for Robinhood lines up almost perfectly with the rise in active users for sports gambling apps like DraftKings, FanDuel, and the various casino offerings.
Oh man. That is a huge rise. 120 billion illegal sports betting.
A report by Bloomberg found that these investors were taking their money out of stocks to top up their accounts on these platforms. And really, they have about the same chance of hitting a 5-leg parlay as they do making money on a 0-day to expiry out of the money call option on orange juice futures. So the number of people owning shares for the first time is misleading at best, and outright dangerous at worst. But you are probably better than that, right? You might have a buy and hold portfolio.
Well, but baby, the thing is, you need a lot of money, and that is the hard part. I mean, you gotta put it into context. For example, like Europe, even getting a salary that pays 6 digits, like let's say like $100,000. Getting that would be such a luxury. So that's probably not gonna happen to most people. Let's say like that's top 5%. Maybe also it's not gonna be possible. It's only gonna be possible later, so you gotta like grind up to it. But like it's top 5% at most, right? But if you had like 1 million invested, then you automatically have that, right? You could, if assuming 10% returns, and that's it. And you probably have gotta have to pay much higher taxes from your job. So it could be like, suppose you had like, I don't know, like 700,000 or even 500,000. Look, let's just go with 700,000 investment. Good job. You're better off than the tippy top in Europe. But if you had like 1 million in investments, this could be your house and some investments, you're almost certainly better off than most people.
Portfolio that you make regular contributions to. You don't have any high interest debt, and you might even watch low energy boomers like Ben Felix or the Plain Bagel that give realistic guidance on how to invest your money.
I don't do any of that. I just do S&P 500 and hold.
Surely you are an investor.
But I need more money.
Right? Wrong. Statistically speaking, the only difference between you, the average person watching this video, and someone blowing up their Robinhood account is at least those guys have a little bit of self-awareness. So it's time to learn how money works to find out why you are not an investor, but it's very important that you think you are. This video was actually inspired by a comment on our video about farmland becoming the target of major investment firms. I don't want to call that particular commenter out, but they said something like, even if investors do buy up all the farmland, it doesn't matter, because we are the investors through our pensions, retirement savings accounts, or direct holdings.
No. I think the regular person possibly has a misunderstanding about human nature, especially of those who are really motivated, really ambitious to own everything. They just want to use it as leverage. I mean, at best, they're gonna use it to prop up the food prices later, right? Maybe worse. It could be some kind of scenario where the country actually has to take it away from them.
This line of thinking has been used to protect investors in the past with big bailouts, because if markets are allowed to suffer, then people will lose their life savings. The reality is that stock ownership in America is incredibly concentrated in the hands of very wealthy people. According to a Fed survey of consumer finances, the top 10% of Americans own 93% of all stocks. So everybody worth less than $1.6 million is really just fighting over the scraps. Even
Yeah. They're your owners.
within the top 10%, stock ownership is still incredibly concentrated with the top 0.1% increasing their holdings faster than any other group. These people are investors.
And it is an interesting point that suppose they had like 10 million, right? If they have like a fair amount of savings, fair amount of investments, they are on an escape velocity. No one, and I repeat, no one can catch them with a job. In order to catch up to them, you would need to easily eclipse whatever they are making. So you would need to have some kind of business that's making like at least, well, assuming this 10 million guy, you would need to make at least 2 million with your business to start catching up to them. You're probably way more.
Investors, as a majority of their earnings power will be derived from dividends and capital appreciation from their shareholdings. The detail is that very few of them got there by investing alone. Most of the wealth in the very highest percentiles of wealth was made through a combination of investing and either running a successful business, having a career as an extremely well-paid executive, or just inheriting their investments. There is a similar misconception that millionaires get rich by building an average of 7 different sources of income, just like the idea of...
Yeah, I think more than ever people are realizing that a job is extremely insecure way of making money. And no doubt you don't have a choice, because that is the world you live in. But if you lose your job, I guess you might be able to get another one, but with like the AI really taking the jobs. And based on various stats that I've seen, the average time to get another job, this could be like 6 months to over a year. So depends on the time. But still, it's not great if you need it to live, right?
idea of being an investor can make you rich, this is based on an element of truth. It's based on an IRS report that studied households between 1998 and 2002, and it found that high net worth respondents had reportable tax income from dividend income from stocks owned, earned income from paychecks, rents from rental real estate, royalties from selling rights to use something they've written or invented, capital gains from selling appreciated assets, profits from business they own, and interest from savings, CD bonds, or other lending activities.
So me, I'm mostly doing business and investing in real estate and stocks. That's pretty much it. They might have a job, but they probably wouldn't be bothering the job that is making peanuts for them.
The thing is, at least 4 out of those required the household to have money invested in the first place. So they didn't really get rich from having
Money makes money.
multiple sources of income.
The rich get richer.
They had multiple sources of income because they were rich. So what this means is that for the vast majority of even the most diligent investors, it's better for them to focus on increasing their earnings to buy more investments than it is to focus on hyper-optimizing their investments. In the best case scenario, if you have got yourself a good job, made responsible financial decisions, and are consistently putting money away into an investment portfolio, not only are you in the top 5% of people, but you are still a worker that happens to have some investments. Now,
If you're just a regular Joe, your efforts almost certainly would be better spent on trying to make more money, whatever way you can. Of course, if you have a lot of money, then almost certainly trying to maximize the money you get from your investments is gonna be the best play. But for most people, it's just trying to put more money into investment is gonna be the way.
Now, there are actually 3 reasons why it's really important for you to think otherwise. The first reason is that people that think more about their investments tend to make worse investments. A study by UC Berkeley found that stock portfolios held by female investors generated annual returns of 1% higher than their male peers on average. 1% might not sound like a lot, but compounded over a multi-decade investing horizon, and that small difference could easily double or triple a portfolio size. For single men and single women, the difference was even wider at 1.44%. What was the cause of these higher returns? Women just cared less about investing, so they didn't try to fine-tune their portfolio as much as men did. There's an entire industry of market makers and prop trading firms that can only make money when there is dumb money active in the market. So there was a more
I would correct, possibly, or at least add to his phrasing, that just because you are not tweaking it all the time, that doesn't mean you don't care about it. If the best play is lazy, just do the best play, right? It would be stupid to do anything else.
There's a multi-billion-dollar industry that really needs you to trade your investments as much as possible so they can pick up a few cents every time you do. The second reason is that if people think they are investors, they are a lot more receptive to pro-investment policy either from their governments or their companies. Bailouts policy.
Huh? Capitalism versus socialism? Buffett Munger? Gates and Munger? Really? Who's arguing for socialism here? These are the richest guys.
Either from their governments or their companies. Bailouts, loosen investment regulations, lighter work protections, and business subsidies overwhelmingly benefit investors often at the expense of workers. Other questionable practices, like corporate investment into single-family homes, leveraged buyouts, anti-competitive practices, and market consolidation are surprisingly hard to push back against, because lobbyists...
I'm not a fan of, well, renting out houses, and I don't think that should be something that we have as a society. Social housing, rent it out, okay. Owning houses, like, just to live in it, okay. But this landlord business is probably not good.
Immediately bring up the fact that restricting these practices would hurt people's retirement savings if these businesses couldn't do what they do. If people think they are...
At very least, social housing should drive down the market, right? It wouldn't be that bad if the market was forced to be legit. If if your rent was like third, then I guess it would be acceptable. So you have a real choice. Not that you can afford the house and now you have to rent for a crazy amount of money.
If they are investors, it's a lot easier to get support for these policies. The third reason is that people who think they are...
But of course you have to keep in mind that anyone who has a house that they're hoping to rent out, or even just owns a house and they want to prop up the value, are gonna be against this policy. So essentially against people having their own homes. Because you can only rent out your home if others don't have their homes.
Think they are investors are better consumers. A survey of 2,070 respondents conducted by the market research firm Ticker found that consumers were 80% more likely to purchase from a company that they own shares in. Apple shareholders were more likely to buy an iPhone. Amazon shareholders were more likely to be Prime customers, and Tesla shareholders were much more likely to drive a Tesla. It's highly unlikely that the investment returns from these companies will cover the purchases unless you made a significant investment when these businesses were much smaller than they are today. If you buy a few Tesla shares because you believe in the vision of electric self-driving cars and you also pick up a Model 3, then you are a consumer that just so happens to also own some shares, not an investor. Companies know about this trick, and some of them even offer special deals to shareholders in the business. The Carnival Cruise Line Corporation, for example, offers shareholders discounts on trips if they own at least 100 shares in the company, which amounts to about $1,800 as of the date of making this video. They don't offer these deals because they think a few retail investors will bolster
But you probably should not be investing into companies based on possible bonuses that they might give you.
their stock price. They do it because it's effectively a loyalty program that people tie up hundreds of dollars to join.
I mean, like, these token bonuses, but you might get a hamburger.
Now, the most important piece of nuance amongst all of this is that investing is still incredibly important. Go watch my latest video on the millions of people who can't afford to retire but are being forced to anyway to find out why. And as always, if you want to get these videos daily and read some harder hitting articles that just wouldn't do well here on YouTube, sign up to my completely free email newsletter to keep on learning how money works.